Howdy, folks. Welcome to Liberty Call. It is Wednesday, November 9th, 2022. It's my youngest son's 25th birthday. Do I look old enough to have a 25-year-old? Well, with all this gray hair in my beard, I'd say yes. If it's your first time watching, please hit the subscribe button. It's probably down here, somewhere around here, maybe that right there. And give me thumbs up, like, share, subscribes. I apologize for not doing a show yesterday. Some bad news. My oldest dog, Barney, who is the director of security here at DSA Financial Group, is unfortunately, he's dying, and we're going to have to put him down at the end of the week. So made a lot of phone calls getting that scheduled, and eyes are all red from being all tired or crying a little bit and being upset. He's unfortunately just taking a turn for the worse. So, but he's had a wonderful life, and I'm going to miss him. And anyways, so but on to the market's pretty ugly today, but. Things can only they'll get better someday. And unfortunately, it may take a few months for us to get out of this trough that we're in. But let's go ahead and dive into the numbers. Dow Jones was down 1.95% today, or 646 points, closed at 32,513. The S&P 500 was down 2.08, closed at 3748. NASDAQ was down 2.48, closed at 10,353. Small caps were down 2.75%. The VIX was up 2.15 today, closing at 2605. Canada's market was down 1.61. Brazil was down 2.22. Mexico down 0.67. Lots of red I see across the pond over in Europe. Germany down 0.16. UK down 0.14. Let's see. France down 0.17. The Euro stock's down 0.3. Netherlands down 0.98. Spain up 0.52, Italy up 0.36, Switzerland up 0.71, and Portugal up 0.34. So some of Europe was okay, but a lot of it was in the red. The Russian exchanges both in the red today. The MOEX down 1.84, the RTSI down 2.55. And looking at the Asian markets overnight, not real good either. In Japan, they were down 0.56. Australia was up 0.58. New Zealand was flat at 0. Maybe they were closed today, or they just opened. In China, the Shanghai was down 0.53. The SE component down 0.79. The China A50 down 1.1. TJ Shanghai down 0.58. Hang Seng down 1.2. And the Taiwan weighted finished the day up 2.18. So one of the bright spots in the Asian markets. So not the most terrific day for November 9th, but those things do happen. So, all right, well, let's read through today's market recap and see how things are going there. Dow dives on tight midterms ahead of inflation data, which is coming out tomorrow. Excuse me. Had a lot of meetings today. My voice is suffering. The Dow slumped on Wednesday as an unexpectedly tight U.S. midterm election clouded the outcome on the likely winner in the battle for control of Congress, just a day ahead of inflation data that could further shape the Federal Reserve's thinking on rate hikes. The midterms didn't bring the landslide victory for the Republicans, or so-called red wave, more of a red trickle, that many had recently predicted. The GOP is still widely expected to win a narrow majority in the House, leading to a divided government, but the race for the Senate is tight after Democrats fared much better than expected in key races. Yeah, I'm kind of surprised by Pennsylvania, quite honestly, because if I was someone who voted blue, I don't think I could vote for that talking potato. He just is not impressive at all. Not that Dr. Oz is great either. Let's see. But the midterms and bets on how political gridlock has historically proved a boon for stocks may prove, quote, short catalyst for people to square their positions for the rest of the year, end quote. Zui Ren, managing director and portfolio manager at Penn Mutual Asset Management, told investing.com on Wednesday. The Fed is the bigger force in the market, Zui said, ahead of the inflation data due Wednesday that is expected to show slowing price pressures. Energy was the biggest drag on the broader market, down 3%, following a larger than expected increase in U.S. weekly crude inventories and positive news on the Ukraine-Russia war after the Kremlin ordered troops to pull out of Kherson. Coterra Energy, Hess Corporation, Occidental Petroleum fell more than 8%, with the latter's mixed quarterly results that showed a miss on the bottom line, further souring sentiment. Walt Disney, meanwhile, fell more than 13% after reporting quarterly results that fell short of Wall Street estimates, driven by weakness in its parks and media businesses. The media giant also warns about slowing growth for its Disney Plus streaming platform. In tech, Meta Platforms, Facebook, bucked the trend lower to rise more than 5% after the social media company detailed plans to cut more than 11,000 jobs. The cost cutting was welcomed by Wall Street amid frustrations about the company's ongoing plan to invest in the metaverse. Roblox dropped more than 21% after the video game company reported a wider than expected third quarter loss. D.R. Horton, Inc.'s better than expected quarterly results helped it shrug off a slip in home builders amid data showing mortgage rates jumped. All right, so again, kind of a mixed day, but certainly not the worst. All right, next up, to add to the news about oil. Oil down 3% again on U.S. stockpile build. The IEA warns against $100 a barrel oil. U.S. oil inventories have been volatile of late, and crude prices have been overreaching on their way up and down, depending upon whether the data shows a stockpile build or drop. But when the head of the International Energy Agency, or the IEA, cautions about the damage $100 a barrel can do to the economy, especially when U.S. crude stockpiles come in 3 times more than forecast, expect the damage to oil bulls to be worse. Oil prices fell 3% for a second day in a row to show a net loss of 7% on the week that wiped out all of last week's 5% gain, as IEA chief Fatih Birol's warning about the hazards of triple-digit pricing coincided with large crude stockpile build reported by the U.S. government. New York traded WTI, the benchmark for U.S. crude, settled Wednesday, trading down $3.08 or 3.5% to $85.83 a barrel, extending the near 4% slide from 2 previous sessions. WTI hit a 3-month high of $93.74 on Monday. London traded Brent, the global benchmark for oil, settled down $2.71 or 2.8% at $92.65, adding to the 3.2% drop between Monday and Tuesday. Earlier this week, Brent came within cents of touching $100 within a session high of $99.56. Crude inventories jumped by 3.925 million barrels during the week of November 4th. The Washington-based Energy Information Agency, or EIA, not to be confused with Beryl Paris's IEA, said the market expected a build of 1.36 million barrels, so 3 times that instead. In the previous week, October 28th, crude inventories saw a drop of 3.115 million in stockpiles. Distillates stockpiles fell by 500,000 barrels last week versus a forecast drop of 0.8 million. In the previous week, distillates saw a build of 0.427 million barrels. The IEA chief warning touched on an area that has been overlooked as of late, as of OPEC Plus, officially led by Saudi Arabia, with its allies steered by Russia, pushed ahead with maximizing revenue for its oil by announcing a production cut of 2 million barrels per day from this month, even as global crude supplies were in structural deficit. Oil bulls' support for OPEC Plus isn't surprising, as they typically support every supply crunch, real or artificial, but many are also hoping inflation would cool enough for the U.S. Federal Reserve to step away from the jumbo-size rate hikes it has been doing since March. I don't call 0.75% jumbo-size, but I guess you could say that. Quote, I've been saying this for a while, and I'll say it again. If oil goes well above $100, how in the world would inflation go down meaningfully, given the amount of energy input in almost everything we consume, end quote, said John Kilduff, partner at New York energy hedge fund Again Capital. Quote, you don't need a Harvard degree in economics to ask that question, end quote. And that's something I've been saying a lot in the meetings of late, is that I really don't see things getting cheaper until energy costs go down. And until energy costs go down, things are just going to be expensive. All right. Next up, U.S. wholesale inventories revised lower in September. U.S. wholesale inventories increased less than initially thought in September amid decreases in stocks of petroleum and computer equipment, also suggesting that businesses were carefully managing their inventory amid slowing demand. The Commerce Department said Wednesday that wholesale inventories rose 0.6 instead of 0.8, as reported last month. Stocks at wholesalers advanced 1.4% in August. Economists polled by Reuters had expected that inventories would be unrevised. Wholesale inventories increased 24.1% in September on a year-on-year basis. Inventories are a key part of gross domestic product. Petroleum stocks fell 3.8% after rising 3.4% in August, while those of computers and electronic products slipped 0.5%. Wholesale motor vehicles inventories rose 1.8% after accelerating 5.1% in August. Wholesale inventories, excluding autos, gained only 0.4% in September. This component goes into the calculation of GDP. Inventories have been a drag on GDP for 2 straight quarters, subtracting 0.7 percentage points in the third quarter. The economy grew at 2.6% annualized rate last quarter after contracting in the first half of the year. Inventory accumulation has decelerated considerably from the robust pace in late 2021 and early 2022 because of easing supply chain bottlenecks and ebbing demand for goods as the Federal Reserve aggressively raises interest rates to combat inflation. Some businesses, especially in the retail sector, are sitting on piles of unsold goods, forcing them to place fewer orders with factories and exacerbating fears of a recession. Sales at wholesalers picked up 0.4% in September after being unchanged in August. At September's sales pace, it would take wholesalers 1.31 months to clear shelves, unchanged from August. So, things are slowing down. That probably is going to mean a recession next year. So I wouldn't get your hopes up that things are, improving dramatically at the moment. All right. And one last bit of terrible news for you. It's titled "A Major Problem." The U.S. now has a record $31 trillion in debt, made worse by rising interest rates. And this is who holds the IOUs. I know I talk about this a lot with clients. They probably, shake their head at me and roll their eyes because I always make such a big deal about the national debt. But, I'm wondering, hey, when is all this going to collapse? I mean, this can't go on forever. All right, let's dive in. The gross national debt of America has hit new heights, surpassing $31 trillion. I think it's actually 31.2 as of today when I looked earlier. According to a recent U.S. Treasury report, if you find that hard to wrap your head around, it basically boils down to more than $93,000 of debt for every person in the country, according to Peter G. Peterson Foundation. And with the dramatic rise in interest rates over the past few months, the Fed funds rate is currently between 3.7 and 4%. The national debt will be growing at a rate that makes it even harder to ignore. Quote, "Interest rates are a major problem," end quote, said Philip Braun, clinical professor of finance at Northwestern University's Kellogg School of Management. Quote, "The Treasury finances of the debt with a lot of short-term borrowing. It'll push other budgetary items out," end quote. Let's see. A deficit is what happens when government spends more money in its fiscal year than it brings in through taxes. And the last couple of years have been expensive. Several large bills with hefty price tags have been approved since the start of the pandemic, including the American Rescue Plan Act, which cost $1.9 trillion, and $750 billion for student debt relief, all adding to the deficit, which then adds to the debt. And though the Inflation Reduction Act, which passed in August, is expected to reduce the deficit by $240 billion. Policies and programs brought in by the Biden administration are expected to add trillions more over the next decade. The Committee for Responsible Federal Budget, a nonprofit that addresses federal budget and fiscal issues, estimated that $4.8 trillion will be added to the deficit by 2031. Quote, "Excessive borrowing will lead to continued inflationary pressures, drive the national debt to a new record as soon as 2030, and triple federal interest payments over the next decade, or even sooner if interest rates go up faster or by more than expected," end quote, says the CRFB. Much of the borrowing in the past couple of years happened while interest rates were at historic lows, but now they are not. With inflation rising at the fastest pace in decades, the cost of this debt will be amplified. Quote, "Having government debt being 1.2 times larger than the economy is not very good thing," says Braun, quote, end quote, and it really jumped because of the pandemic. But even before that, it's been rising since the Great Recession, end quote. That is true. Currently, more than $965 million is spent every day just in interest on the national debt. The Peterson Foundation estimates that will triple over the next decade, making it the fastest growing item in the federal budget. And when the government owes a lot, it makes it harder for corporations to borrow money. Quote, "The federal debt squeezes out other debts in the economy," says Braun. "There's only so much money in the economy, and so when the government borrowing with the government borrowing such large amounts, there's only so much that people are willing to lend overall in the economy, so it pushes out other types of borrowing," end quote. The government could have refinanced its debt while interest rates were low, he says, but it didn't, quote, which means the borrowing costs today and into the future are unnecessarily higher because of that, says Braun, end quote. There are different kinds of national debt. Think of it like having a credit card, a mortgage, and a car payment, all debt but different. The U.S. Department of Treasury manages the national debt, which is split into two different types of debt that one government agency owes one another and debt that are held by the public. Intergovernment debt accounts for about $6.5 trillion of the debt. The much bigger piece of the debt is held by the public right now, about $24 trillion. Foreign governments, as well as banks and private investors, states and local governments and Federal Reserve own most of this debt, and it's held in Treasury securities, bills, and bonds. Foreign governments and private investors are one of the biggest holders of public debt, owning about $7.7 trillion. Domestically, the Federal Reserve holds the largest share of the public debt, about 40%, but there is some good news when it comes to debt the Federal Reserve owns. Quote, the Federal Reserve owns a lot of government debt, says Braun. The Treasury does pay interest payments to the Federal Reserve, but then the Federal Reserve turns around and gives it back to the Treasury. That alleviates some of the issues, end quote. And then a warning sign. Ultimately, rising interest rates will only exacerbate the national debt, making it harder for the government to respond to a slowing economy. Quote, for too long, policymakers have assumed perpetually low rates, and we are now seeing in real time how dangerous that assumption is, end quote, said Michael Peterson, CEO of Peter G. Peterson Foundation in a statement. Quote, as our debt crosses $31 trillion, it's past time for action, end quote. I agree. I think our legislators will do nothing about it. They'll pass the buck, kick the can, whatever you want to call it, and it'll at some point all fall apart. Whether or not it's going to be in the next couple of years, by the end of the decade, I have no idea. I'm kind of curious to see what happens next, quite honestly. And I'll do my best to keep my clients' assets afloat and try to dodge most of the icebergs that are floating in front of us. But, it's just going to be ugly for most Americans out there. And it's really sad. So, all right. Well, that's everything I had for today. I hope everyone has a fantastic evening. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And we'll talk to you tomorrow. Bye-bye.